Vietnam's rise as an economic power is one of the most impressive transformations in recent history. After the Vietnam War ended in 1975, the country was extremely poor, isolated, and centrally planned under a strict socialist system. The economy struggled with shortages, inflation, and low productivity. The real turning point came in 1986 when the government launched major reforms called Doi Moi, or renovation. These reforms shifted Vietnam from a rigid state-controlled economy to a socialist-oriented market economy, allowing private businesses, foreign investment, and global trade to grow. One of Vietnam's biggest strengths has been its export-driven growth strategy. The country opened its doors to global companies, offering competitive labor costs, political stability, and improving infrastructure. Over time, Vietnam became a manufacturing hub for electronics, textiles, footwear, and machinery. Major global companies like Samsung, Intel, Nike, and Apple suppliers built factories there. Today, Vietnam is one of the world's largest exporters of electronics, smartphones, and garments, with exports worth hundreds of billions of dollars annually. Foreign direct investment, or FDI, played a crucial role. Vietnam signed major trade agreements, including joining the World Trade Organization, or WTO, in 2007, and later agreements like the CPTPP and EVFTA, giving it access to key global markets. As trade tensions between the U.S. and China increased, many companies shifted production from China to Vietnam, a trend often called the China Plus One strategy. This made Vietnam even more important in global supply chains. Another key factor is demographics. Vietnam has a young, energetic workforce with strong participation in manufacturing and technology. The government also invested heavily in education, infrastructure, ports, and industrial zones, making it easier for businesses to operate efficiently. Unlike some developing countries, Vietnam maintained relative political stability, which reassured investors. Vietnam also focused on gradual reform instead of shock therapy. It kept state-owned enterprises in key sectors while slowly encouraging private enterprise and entrepreneurship. Over time, poverty rates fell dramatically from over 70% in the 1980s to below 5% today, and GDP per capita rose significantly. In simple terms, Vietnam became an economic power because it reformed its system, embraced global trade, attracted foreign investment, leveraged low-cost manufacturing, invested in infrastructure, and positioned itself strategically in global supply chains. It moved carefully but consistently, and that steady growth transformed it into one of Asia's fastest-growing economies.